Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, which has been pretty negative overall. We have the overall sentiment quite negative, driven by a confluence of turning development. We are seeing increased trade tensions stemming from potential tariffs, mixed economic data, mostly to the negative, as we are going to review, and the emergence of a significant AI competitor that is causing an ease in the tech sector. The US economy is facing several headwinds. The latest US GDP growth came in at 2.3%, and we are seeing this as an indication of a pretty big slowdown in economic growth because we're falling short of the 2.6 forecasted and coming back down from the 3.1 previous. This is the first thing that impacted markets because it signals a pretty big slowdown. Adding to these concerns are US durable goods, pretty in the negative because they experience a sharp contraction with a drop of minus 2.2%, suggesting weakening in business investment. So the forecast was positive 0.60, and we were pretty far from that. Furthermore, several inflation indicators remain elevated. The US PCE price index year over year came in at 2.6%, showing that inflation remains above the Fed target of the 2%. And not only that, look at these figures for the rest of PCE price index. We have 2.8 in core. We have year over year. We have also on the month over month, also positive, higher than the previous one, indicating continued upward pressure on prices. Then, finally, the US employment cost also rose 0.9%, which is also negative. Elevated employment costs contribute to inflationary pressures. And at the end, consumer spending, it's basically pushing a little bit upwards in the month over month from 0.4 to 0.70, which is also inflationary because higher consumer spending could fuel inflation. So basically, what we have here is a series of negative indicators from the economic data. One of that, PCE, is one of the most followed ones by the Fed. So this is the overall picture in terms of US data points. But adding to these concerns are the potential tariffs and a major source of anxiety. The US is expected to impose tariffs Canada and Mexico starting March 1st with the possibility of a broader universal tariff. But March 1st was somehow really a scratch because Trump yesterday on Friday afternoon said that maybe today, Saturday, he's going to sign executive orders to impose those tariffs right now. That's why we had this sell-off on Friday afternoon. Pretty big sell-off, which indicated that some key levels are still being rejected and the sentiment is pretty low. So in terms of economic data and fundamental analysis, it is what it is. It's pretty negative, pretty red. Now this week we had a lot of earnings from the big tech companies, and these corporate earnings, we've seen a mixed bag of results, but I would say they were decent. The expectations were pretty high in terms of the earnings for all of them, but I would like to discuss and highlight some of them. Tesla missed on both earnings per share EPS, reporting 73 cents versus 75, which is negative, and the revenue also fell short from 25 billion to 20. That's the first thing I would like to mention. This shows decreased demand in the automotive sector. Then, big one, Apple EPS and revenue came in a little bit better than expected. Beat EPS estimate, beat revenue, but falling short in iPhone revenue because it missed expectations due to China fall in demand. Then we have some of the uh, consumer spending stocks with positive earnings in, excuse me, Visa and Mastercard beat EPS estimates and revenue estimates. This is aligned with the fact that we have positive consumer spending. And then we got Intel, we got a mix of Chevron beating estimates. So on the revenue, but falling short on the EPS. But the big ones were, as I said, Tesla and Apple earnings. Meta also crashed earnings in a big way. But overall, I think if you see how all these stocks perform on the earnings report, it's mostly positive. But I think Tesla and Apple are the most important ones until Nvidia reports earnings. And due to this pretty bad picture on the fundamental data, including BCE, and then these earnings that were decent, I'm pretty confident, in my opinion, that the sentiment is really, really low. Because at the end of the day, it's the market looks forward to growth, looks for opportunities to increase their share value, and the Federal Reserve's commentary added another layer of complexity because Powell stated that the Fed doesn't need to wait for the 2% inflation to get raised, but also emphasized that there is no rush to adjust policy rates. So they will focus on concrete progress on inflation, but we are not seeing that with other members. Other Fed members like Goldsby and Bowman also echoed patient approach, indicating that while rate cuts are still expected, future policy moves will be cautious and data dependent. And we are not getting that. The big sell off on Friday was also related with the potential tariffs that are going to be signed today, Saturday, and all this with the big hit of US stock Nvidia falling pretty hard due to the new AI competitor that is creating a climate of uncertainty and high volatility. So look at this. My opinion is that we are in a pretty negative and as pretty bad move, bad mood in the market because there are a confluence of pretty bad catalysts. And even though we are in earnings week, I think this is not starting the year, finishing the month. I think big portfolios are being adjusted to Trump policies, and it's really, really not good. So let me just go to the charts and show you first the advanced decliners and in terms of market internals, how we dealt with some of these. So we have, this was the week we started waiting for the FOMC, then Apple earnings and good earnings, and then Tesla, Microsoft, and the tariffs Friday. So pretty bad on the volume, and then on the advanced decliners, we really had a good Thursday, pretty good Thursday but then on Friday we short of a lot of things. That's on the S&P. On the Nasdaq, things are also pretty wild in terms of volatility. Look at this volume and also this volatility. Thursday, big squeeze, and then on Friday. This is Friday's NQ 15-minute chart. I like to see the 15-minute chart as the narrative of the market. And we had a gap up here that we basically destroyed. We we started pretty good. We almost reached 22,000, but then look at this sharp decline of value. It was 300. So even though we on the FOMC and earnings we started to hold, we were in a holding pattern during the pre-market on Friday. Everything was wild during the open, big squeeze, and then Trump said that Saturday was really big tariffs. So everything was trying to reclaim the deep seek hole. Look at this big, oops, look at this, the big move here, but we are seeing a pretty wild. So we have to be really cautious because all these might be liquidity for the bigger players. We do things this. I mean, a lot of longs are going to be liquidated, and there will be quite a hard move, right? This is the 15-minute. If we go to the 1 hour, we are encapsulated in between a bullish fair value gap, a bearish fair value gap that comes from really way back. But look at this pattern. Just a 1 hour, a pretty high time frame. Look at this pattern. Look at these sell-offs. It's pretty wide. The volatility is good. I only see these kind of things. The upside, I see big moves, and then in a couple of hours, moves to the upside, to the downside. So everything is encapsulated in in this 1 hour inverse fair value gap, which holds a liquidity, and it looks like we build liquidity and we fall. Build liquidity and else. Well, I think we have to be cautious because price action is quite volatile and quite hard. And the sentiment, as we were mentioning before earlier in the economic data, is not pretty good. See a lot of volatility on Nvidia. We've seen Nvidia is biggest AI stock in the world. So we see Nvidia struggling. We have to really be careful. Banks are not doing good either. And in terms of small caps, which are basically waiting for rate cuts, they jump a little bit, but we are in terms of where are we located in the context, we are still in the middle of the rate after all these adjust of for the rate cuts. So the outlook it's not pretty good in terms of the daily. We ended up on Friday with a pretty bad looking candle. We have also these buyers that came in here on the deep seek day, and we just have to wait. Right now on the 1 hour, I would like to see some things. But the new week opening gap was respected. We closed below that, closed below the gap up, and in my experience, all these might be adjust that. I don't want. Um, I think this is as liquidity. This might be a thing of concern in my expectations and my experience. I think all these might be longs that might be liquidated if we start bad and bad and bad for next. Have to be really careful. That's my opinion. That's what I'm going to be watching for next week. I won't be looking to trade this, but I certainly will be recommending a lot of caution and analyzing the price action in detail because this is the end of the week was not really good. And we might start liquidating to the downside until some newer catalysts, some positive catalysts appear. So I think that's all. We covered a lot of things. Now we have to do your own analysis because I shared my opinion. I always shared my analysis, my data with you. You know my strategy, how I approach price action, but you have always do own diligence and trade what you like one. I only shared my approach and my opinions for you to make your own judgment. And that's the best way I can share. You can like, can follow my videos. I appreciate that. But at the end of the day, you have to do this by yourself and also watching the opinion of others. That's why I share all. So that's all from my side. As always, thank you for your time. If you found this weekly recap useful, please give it a like, subscribe to the channel. I upload these kind of videos every Saturday, the weekly recaps, and from Monday through Fridays on market daily updates or market forecast, market updates, and market recaps. I appreciate your time as always. Remember, do your own analysis, do your own homework, but also rest during the weekend. Take your time to be away from the screen, off the screens, and take care of your mindset. That's a good deal. And remember that discipline and patience and risk management are key for your success in. Thank you, everyone. Stay safe. Have a nice weekend and see you on Monday.